Welcome, Morteza, to our podcast on public service. We're really glad to have you here. The U.S. Department of Transportation is just a massively important agency in the government. It affects so many lives, but it's kind of hidden. People take transportation planning and transportation infrastructure for granted. So we're really glad to have this time with you so you can explain it all to us and how it impacts ordinary lives out here. You know, we're in San Diego, you're in Washington, D.C. So if you could tell us a little bit about your background, how did you get to this position and what brought you to this level of interest in transportation?
Thank you, Shahriar. It's actually an honor to be with you today. I'm glad that you reached out, and I'm glad that we have time today to talk to each other about transportation. As you mentioned, transportation is really important. It touches our lives on a daily basis, and every single one of us, one way or the other, directly or indirectly, every day we deal with transportation projects, concepts, issues, and it's really important to focus on it. The way that I got into it, when I was in school, I got my bachelor's degree in civil engineering. I was dealing with buildings at the time, but I knew that I wanted something a little bit different. So I focused more on bridge design, even when I was getting my bachelor's degree. But right after that, I decided not to be an engineer. I've never designed anything in my life, although I have an engineering degree. But I got into project management and project finance, and I was at the University of Maryland at the time doing my graduate study. And that's where I got introduced to a new concept that is called public-private partnerships. And you're probably hearing a lot about public-private partnerships these days. And I'm talking about 12, 13 years ago, 14 years ago. That's when I started. It was a cool concept. I started doing research on it. And then quickly, I figured out that that's my passion. I'm enjoying it. Project finance was really interesting for me. And I joined Virginia Department of Transportation. It was back in 2011 when I talked to them, and they hired me. I worked 8 years for them on a variety of projects, from tunnel projects to bridge projects to express lanes or managed lanes, toll roads that are dynamically priced, to other types of projects that they were procuring in their public-private partnership office. And that's really how I got into this career, and I just continued it. And it's about 2 years, a little bit more than 2 years now, that I have left VDOT, which I have very, very good experience with them, a lot of good memories. And now I am wearing a different hat, which is the federal hat, with U.S. Department of Transportation in a unit that is called Build America Bureau. And what really attracted me to go and join them is the fact that I was negotiating a lot of loans for Virginia projects at Build America Bureau. I was representing Virginia on multiple projects, and we got low interest rate loans that were instrumental in financing those projects and moving them forward with minimum cost. And there was a point of time that I talked to a couple of friends at DOT, and they told me that, well, it looks like that you're a repeated customer for us. How about you come to this side of the table and try to basically manage the programs? And that's where I am now. Build America Bureau is a one-stop shop that has a couple of credit programs to just simplify things. It's like a mini bank within DOT that provides loans to transportation projects. Doesn't matter what type of transportation. We work with highway projects, with transit projects, with rail projects, ports, airports, transit-oriented development type of vertical construction. And it's pretty diverse and very good opportunity to work with different states and different localities such as San Diego.
Yeah. So how old is the Bureau? Was there another option to the Bureau that existed before, or what if the Bureau doing is so unique that there are no other choices? You have to work with the Bureau.
So the Bureau is about 5 years old. But the programs that we have, the two main credit programs we have, one of them is called TIFIA, which is mainly for highway projects, transit projects, as well as some airports, ports. The other program is RIF, which is mainly for rail projects. These two programs have been around for more than 20 years. But TIFIA was being administered under FHWA prior to coming under Bureau. And RIF was administered by Federal Rail. That it was about 5 years ago that both of them were brought under Bureau. And since then, Bureau is administering both of those programs, as well as we have created capacity under Bureau to provide technical assistance. I think that's another big element of what we do. We provide technical assistance to those who want to think outside the box, think about innovative procurement, the delivery options, innovative financing options, as well as really trying to brainstorm and think about how they can think outside the box and finance these projects instead of fund these projects. Because a lot of localities are familiar with the concept of funding projects. That's how most of the large projects were built in the past. Just make sure that project is fully funded. If project cost is $200 million, let's find $200 million and then put shovel in the ground and move forward. With the newer concepts, similar to when we go and get a mortgage on our house, we don't need to come up with all of the cash up front for a good project. We can finance that project, build it today, take advantage of all the benefits, and then pay for it over time, especially if you can put a good financing package in place that gives you a financing cost that is less than inflation. That's another good thing about today's environment, that the rates are so low that they're below inflation. So every year that you wait, your project becomes about 5%, 4% more expensive.
Yeah.
So if you can finance it at a rate less than 4%, 5% and build it today, you're actually saving on project costs.
Wow. Well, I know the city treasurers and the financial managers of states, I'm sure, love what you're saying, because they're looking at every nickel and dime, especially given this COVID recovery. A lot of the tourism and service industry is so impacted. So many regions are struggling to come back and figure out how to come back and restore those businesses. And frankly, some businesses have to go into a different line of business because they've just been shut down. I mean, it's hard to start a small business as it is. But take us through maybe the life cycle of a project. So let's say in San Diego, somebody wants to build a $100 million project, and they apply for a grant. How do they come to you?
As a matter of fact, San Diego is one of the clients we have. So they have borrowed from us in the past, and they have a couple of other projects that they're going through the process with us now to borrow. I can't talk about the specifics of those projects, but in very high level, the way that it works is when you have a project, you have multiple options. One option is to put enough funds in place, as I mentioned earlier, to have enough cash, enough funding to go ahead and build a project. Well, those funds can come from a variety of different sources. Of those funds are state or local funds. Some of those funds are federal funds. And depending on what type of project we're talking about, there might be a certain percentage that state or local government needs to put in the project to match the funding that is coming from federal government. And the funding from federal government, again, can come from a variety of different sources. For example, for highway projects, we have Highway Trust Fund that, based on a formula, it's being distributed among different states. Well, all the gas tax that we all pay at the pump, that's being collected, being sent to Washington, and then based on that formula, is being redistributed to the states. There are also some grants, for example, infra or build. Those are the two main grants that I can think about, especially for highway projects that they can take advantage of them. So that's on the funding side. Mm-hmm. But some projects, as I mentioned earlier, it will be very, very difficult to have all the funding in place. You might have a good project, but because you don't have enough funding this year, you put your money on other projects and you have to wait until you have funding to fund this project and move it forward. Mm-hmm. Now the choice is, do you want to wait a couple of more years and collect enough funding for that project or get grants from other sources to pay for that project? Or would you like to finance it, which is basically borrow to build that project and pay back the cost of project over time? If project is generating revenue, like a toll road, it's a little bit easier to make that decision, because a project that is generating revenue, you can utilize that revenue to borrow against that revenue and build a project. If you don't build the project, you will not get the revenue. So it's a little bit an easier type of decision for those projects. But projects that do not generate revenue, still a project sponsor can decide to borrow against revenues that they may have in the future. And those revenues could be state sales tax, local sales tax, property taxes they're collecting, or any other revenue that they may have in the future, to leverage those, borrow against them, and build that project today. At personal level, we make that decision all the time, because we need to make a decision on whether we want to lease an apartment for ourselves.
Right.
Do we want to get a mortgage and pay for the mortgage over time? Right. Or some people have deep pockets and they may have enough money to pay cash for the apartment.
Sure.
I know that doesn't happen these days that often, but those are the options that also for your infrastructure projects.
Sure. So what are the minimum criteria for a city to work with you? Is there a minimum size project, meet certain criteria?
We actually have different programs, and typically we would like to see projects that are more than $50 million, because the moment that it's less than $50 million, it may not be beneficial to go through this process. But also we have some programs that will provide additional incentives for smaller projects. For example, we have a rural project initiative under which we provide additional incentives. For example, under the regular TIFIA program, we provide loans that are flexible. They can go up until 35 years after substantial completion of the project. And by the way, that's a huge benefit, because what that means is that you can get a long-term loan that in some cases could be even 40 years. If it takes you 5 years to construct the project, your first payment could start even 5 years after substantial completion, which is going to be 10 years from today. And then your loan can go 40 years from today.
Right.
So it gives you plenty of time to build the project, have it operational, go through the initial ramp-up phase, collect revenues, and be able to pay back the loan. But under that rural project initiative, and by the way, the rates we have are treasury rates. So we go and look at the treasury notes comparable to the term of that loan. For example, if you're looking for a loan that's 30 or 35 years, we go and look at treasury rates for 30 years. And today's, I haven't checked today's number, but we are close to 2.3%. So very low interest rate.
Very low, yeah.
Rural project initiative, we can actually cut that interest rate to half. So for rural projects, these are projects that are in rural areas. We define them outside of an urbanized area with 150,000 population or more. For those projects, we cut that interest rate to half. In essence, you get a loan that's only 1.2%. We accept smaller projects for rural. Actually, the maximum project size is $100 million. So we're looking at projects that are less than $100 million. We also have another program under which we can provide a loan to state infrastructure banks up to $100 million. And the way that it works is, let's say if California has a state infrastructure bank and they want to come and borrow from us, we give them a loan up to $100 million. And then they can turn around and provide that loan to smaller projects that could be even $1 million projects, $2, $3, $5 million projects.
Okay.
But we cannot get into the business of administering very small loans at $1, $2, $3, $4 million.
Right.
But we would actually entertain ideas such as that, or bundling. That's another type of opportunity that we see. A lot of localities, they have bridges that are old, and these could be bridges that are $1, $2, $3, $4 million. So what they do is they bundle 10 or 20 or 40 of them, and then they come to us with a project that is $50 or $60 million.
Right. Oh, that's interesting. I mean, like a co-op, all the smaller cities kind of work together and they present a regional project, and that could qualify for some funding. Now, you mentioned personal loans and financing. So begs the question, what happens if a city defaults, can't pay? Local transportation projects are notoriously political. People want it in their backyard, or they don't want it in front of their business. Things get sideways really fast, and people run on campaigns and flip. So I'm just curious, putting that politics aside, what happens if they don't pay?
Well, one of the good things that we brag about it is the fact that our default rate is around 1%. So these programs have been around for about 20 years. We have had more than 137 or maybe 140 loans by now, because we had a couple of new loans that we approved. And just less than a handful of loans have ever gone under. And we haven't really had that issue that a public entity has gone on default, because it's very unlikely. Yeah. But that is because we have a very strong underwriting process. So we don't just give these loans to everyone who comes to us. We actually have to go through that underwriting process. These loans, in pretty much all cases, or most cases, they are investment grade rated. For TIFIA, that is a requirement. For REF, that is not a requirement, but something that we prefer to see. And because of that, we haven't really had a lot of issues. Most of our loans get repaid. And as a matter of fact, a lot of them get prepaid sooner than a scheduled payment, because one of the advantages that we provide to borrowers is If at any given point of time they change their mind, they want to prepay early and get rid of the loan, or if they find something that is cheaper in the market than what we provide to them today, let's say 5 years, 10 years down the road, interest rates even go below what we provide today, they can refinance the project and prepay us without any penalty. So that's another big advantage, because if you go to a bank and borrow from them, or if you issue bonds, that is not available without a cost. So you usually have to pay penalty for that.
Right. So you mentioned it's a good benchmark. You've done about 140 some odd loans, 1% or so of default rate. What would you want cities and jurisdictions to know? What is the best lessons learned after doing so many loans that you wish small cities and states that come to you would know or think of early?
I think the most important thing for them is to be aware of the fact that there are other options that they can implement. They need to be a little bit more comfortable with the fact that innovative financing, innovative delivery methods can help them to advance these projects at a faster schedule and sometimes even cheaper. They need to create capacity, resources within their organization. The number one thing that I have learned is that, especially at local level, a lot of these entities do not have finance people within their organization. They're not able to think about financing. They're not able to think about innovative delivery models. And they don't even know where to go and where to start. To help them, we actually came up with an idea. We had a NOFO out to talk about a funding opportunity that was available to fund a couple of what we call regional infrastructure accelerators. We have actually received a couple of applications that we are reviewing now. So we in this round, we have $5 million that we're providing as grants to different localities or regions who have come forward, and they said that, we have a good project, we have a good idea. We would like to create some capacity to hire people who will work for us internally or hire some consultants to start thinking about these innovative concepts. I definitely encourage everyone else to think about it. The fact that you haven't done it in the past or you're not familiar with it, it shouldn't scare you and push you toward the direction that you would not try it. Try it, start with smaller projects, start with simpler concepts, test the water. And if it's successful, maybe then you can expand on top of that and take advantage of innovative approaches.
Right. So, your bureau is called, Build. It sounds like the Biden administration, Build Back America. So did something change with the new administration? Are there new priorities or accelerated priorities to infrastructure that weren't there before? Have you gotten a new mandate by law that you're acting on now?
As you know, Shahriar, any administration has their own policy goals and objectives. So when we go through a change of administration, especially if there's a change of party involved, those goals and policies will change.
Sure.
The new administration, based on what we have all heard so far, is focused more on a couple of concepts such as electrification of buses, such as transit, such as climate change, or any infrastructure project that is helping to reduce carbon emission, such as resilience, such as safety. So those are the key words that this administration is focused on. Of course, job creation is another important one that we hear it a lot. So moving forward, I do expect that we see a lot of emphasis on those concepts. As a matter of fact, we just released new guidance on TOD program that Build America Bureau is trying to expand. We have always had that authority, but we were not able to take advantage of it. But now under new administration and the focus on transit-oriented development, it's a very good time for us to take advantage of that authority. And we're actually trying to expand our outreach. That guidance that was released on Friday and it's up on our website is the first step toward the direction, but we'll continue to reach out to the right stakeholders and make sure that we can take advantage of that authority. In terms of new authorities, as you know, there are different discussions right now happening between White House, between Congress, There are different proposals and ideas that are out there and they're being negotiated. We just need to wait and see that what is the final outcome. In general, infrastructure is a bipartisan issue. And the fact that we need investment in infrastructure is something that I think everyone agrees on. When it comes to the details and the priorities, there might be some differences. I'm hoping that everyone would be able to come to the table and they will be able to see finally a path forward that would include the priorities of this administration as well as some of the concerns that the other parties have, all in one package that is agreeable to everyone.
Right, right. Do you foresee, and because I've heard conversation about broadband as infrastructure, and maybe it wasn't discussed as infrastructure before, would that be something under your purview, or would that be another federal agency?
Well, one of the challenges that I see is that we do have these federal agencies and roles and responsibilities that there are lines that have been drawn that devise responsibilities. But what I see, at least in infrastructure area, is that a lot of new projects, a lot of new concepts, a lot of new realities, they go across those lines. You can't just say that this agency is in charge or that agency is in charge. I can give you one example. For example, we were talking about offshore wind farms.
Right.
Department of Energy is heavily involved in offshore wind farms, but to install the equipment offshore, you need to have a port that has the capabilities to actually ship everything offshore and then install it. You need to have maintenance facilities. You need to have roads. You need to have rail. You need to have transmission lines. And when you talk about the full scope of that project, you will see that there are multiple agencies that need to be involved, and not just one agency. The same thing about broadband. When I think about broadband in the context of transportation infrastructure, we have the roads. Our roads, most of them are still old-fashioned. It's just the pavement. Some roads we have ITS, Intelligent Transportation System. Some roads we have tolling equipment. And those roads, especially the ones that have ITS or tolling, they need some sort of connectivity because those systems need to somehow be connected to a software or a center that is controlling them. Moving forward, we're talking about autonomous vehicles. Moving forward, we're talking about digital equipment. Moving forward, we're talking about digital roads. And that need is just going to grow. So we need to definitely have fiber or another sort of broadband connectivity as the backbone of our future transportation. Talking about transit is the same thing, talking about rail, talking about airports, talking about ports. So definitely there is a lot of benefit for transportation projects if the concept of broadband connectivity in general advances, because they can take advantage of that and make their roads smarter, build the roads that we need to have for the new generation of autonomous vehicles that I just mentioned.
Right.
And that is something I believe people would understand. And like what I said earlier, when we talk about broadband, we shouldn't just talk about it in the context of whether it's for transportation or it's for education or it's for something else. All of them can come together because if you create that backbone, all of them can piggyback on it and take advantage of it, use it.
Right. Right. I think, my experience has been sometimes jurisdictions don't see broadband as a infrastructure necessity like water and sewer and roads because of exactly those reasons. It's new. We all need to come together and figure it out. We're going to need it. And infrastructure, again, is something that people don't miss today until they miss it tomorrow. But they don't realize it takes 5 to 10 years in planning and funding and all kinds of design to get those roads that they sit in their Teslas and sit in the back seat and hit auto drive. That's another problem. That's another conversation. People don't realize how much investment of time it takes with these types of conversations to make those happen. You mentioned ports. I'm going to finish with ports because I used to work for a port for 15 years, near and dear to my heart. How do you work with ports? There isn't I mean, there is the National Maritime Administration, right? But there isn't necessarily a FAA type administration that rains down billions of dollars like it does on airports, on ports. And I'm just going to share with you, a real quick story. I was up there in Washington a few years ago. We had a meeting with Senator Feinstein, and we kind of pitched this grand idea of a national system of ports, to which she replied, "You want to build something that costs as much as the FAA to run? I thought you guys were independent. You don't have to come to me." She turned around and asked one of her assistants, "How much does it cost to run the FAA?" Somebody said, $18 billion a year, Senator. You want to create an $18 billion a year? We said, okay, we gave up. A lot of government thinks ports are independent. They can tax, they can run, do whatever they want. But I'm curious as to how the federal government, apart from dredging projects, what types of port projects have you seen that you favor or there's monies for?
Well, I prefer not to get into that discussion, Shahriar. Simply, that is not my area of expertise. I can talk a little bit about how we're trying to help some of these ports to finance their projects and move forward. We work very closely with what we call it MARAD. That's the short version of Maritime Administration that you just mentioned. They have a credit program that is mainly used to finance ships. So if people are in the business of manufacturing, building those ships, that they can take advantage of that financing program. But other than that, for the infrastructure that goes in the port itself, we have a couple of areas that our existing legislation would allow us to finance those projects. And there are multiple ports that we have worked on different projects with them. Some of those projects, believe it or not, again, are either rail enhancements or roadway enhancements, because these ports, they need to be connected also to either rail system or highway system or both. And that's another area that, again, going back to my comment earlier, that we live in a world that everything is connected. Connectivity is the key. You can't just single out one type of transportation and say they can just live on their own and finance their projects on their own or build their projects on their own. These are all connected to each other, rail and highway and port. The same thing about airports. You mentioned airports. We do have actually authority to finance certain airport terminal projects that have a transit access. So that's another area that to actually encourage transit connectivity. In the legislation, we have authority to provide financing to those airports. Any type of public infrastructure that actually has transit access or is in the vicinity of a transit station can take advantage of some of those authorities that I mentioned earlier. But I just finished with the point that I made earlier, that we live in a world that everything is connected. When we talk about broadband, connectivity is key. Right. We're talking not about physical assets anymore. Transportation is not just the physical assets that we used to think about them when we're talking about transportation, like pavements, like asphalt and bridges and steel. It's about connectivity. It's about technology. It's about how we are getting the best use of the assets that we have. It's about optimization. Right. Maybe you don't need to add more lanes. Maybe you just need to optimize traffic signals that you have in a corridor. And the solution is just a software. Maybe it's about sensors. Maybe it's about all of these new concepts that some of us may not be as familiar with, but the technology is out there, and we can take advantage of the technology to advance our to address our needs. Right. Again, ports, same thing. I mean, I'm pretty sure that some of these concepts that I'm talking about, I'm more familiar with them when they are related to rail or transit or highway. But I'm pretty sure that when we talk about ports, similar concepts can be implemented. That's an area that I would love to learn more about it. I have learned a lot since I joined Build America Bureau, because we actually work with a couple of ports and a couple of good projects that we have with them. But definitely an area that they need help. They need some of the programs that you're providing to them. And at the same time, we need to learn more about their needs and what type of assistance they need and provide that to them. Because at the end of the day, as I mentioned earlier, everything is connected.
Right. And I'm happy to help you anytime. I know more than a few people in ports over my 15 years. It was just an amazing experience because most people don't understand ports. They go by it because it's a secure facility, but they look inside, they see the cranes, they see the boats coming, but they don't really know how it works, what it does for them. And one thing I did learn in my years with the port is ports don't compete with each other anymore. Supply chains do. So it goes to your point about connectivity, right? It's the most efficient connection that competes with another connection. And ports happen to be in that chain: rail, truck, freeway, boat. And those are the competitive, and now technology more so than before. Those are what's really competing and creates the value proposition as to that banana, cost a nickel at Costco, but, it would have cost more somewhere else. So this has been fantastic. I'm kind of, like I said, an infrastructure geek. I like learning about this stuff, and I like sharing it with others. I will have information about the Bureau under this post. I will have, obviously, the Bureau's contact information. So if someone needs to contact the agency for some guidance, I'll connect to you guys. And thank you so much for doing this. I hope next time there's a project or there's something that you can talk about, or there's other projects where others would like to talk to me, volunteer me, and I will be happy to talk with them about infrastructure anytime.
Sure. Thank you for having me. And I will just finish with just one comment on what you said earlier, that transportation projects don't happen overnight. Infrastructure projects don't happen overnight. Right. You mentioned 5 years. 5 years is on the fast end of that cycle. Sometimes it takes a lot more than that. And one project that I worked on, I-66 Express Lanes project in Virginia, we started environmental study on that project around 2012, 2013, if I believe. And the project is still under construction. Yeah. So almost 8-9 years from the point that we started, the project is not open yet. And that project is actually a very good success story. Yeah. That was procured and now it's going through construction under a public-private partnership model in an expedited fashion. So it's just put in the context for folks that don't wait. If you have a concept, start working on it today, because it's going to take years and years and years to get it to the finish line.
Excellent parting words. Thank you so much, Morteza, for being with us. I hope you'll come back soon.
Thank you very much.